Bitcoin is currently forming a bearish pattern, and yes, it might be gearing up for a move lower. But don't be fooled. While many are panicking, I'm actually preparing to open a major long position right at a key support level. So in today's update, I'm breaking down my exact strategy, the chart patterns, short-term signals, and some massive news that could shake the market. Let's start with the immediate short term. Over the weekend, Bitcoin created a new CME gap around the $97,000 level. Historically, these gaps tend to get filled early in the week, typically by Monday, Tuesday, or Wednesday. Occasionally it stretches to Friday, but the takeaway is, price gravitates back to fill the gap. This sets us up for a potential bullish reversal. However, last weekend, Bitcoin broke below a key support zone between $95,000 and $96,000, then retested it, and fell further. Now we're seeing an ascending broadening wedge pattern form. For those unfamiliar, it's a bearish continuation pattern. We're making higher highs, but they're losing momentum, and the support base isn't strengthening. This hints at a short-term downside move, but here's the twist. I'm not shorting. I'm positioning myself to go long on the dip, specifically around the $91,000 level. Why? Because this zone has acted as a major pivot in the past. Every time we've broken below it, it triggered strong reactions. If we revisit that level, I expect a powerful bounce. So I've already placed a buy order for 2.6 BTC at 91K. I believe this will be the zone where we get a reversal and catch the next leg up. The target? I'm aiming between 107K and 118K, the upper range of the current structure. Now let's zoom out and look at the macro picture. The fundamentals are heating up. Nvidia is reportedly considering adding Bitcoin to its balance sheet after a 24% correction. That's a massive potential catalyst. Trump's 60-day executive order on the strategic Bitcoin reserve expires today. We're likely to hear an update soon on how the US plans to accumulate BTC, a major geopolitical play. In a recent interview, Trump said, "If we don't do crypto, China will." This is a clear sign that global powers are treating crypto as a strategic asset. Michael Saylor is planning to borrow an additional $84 billion to buy even more Bitcoin. For context, that's more than double the total net inflows we've seen from all spot Bitcoin ETFs combined. So yes, this is huge. FTX is also scheduled to release $16 billion in cash to creditors on May 30th. That could inject serious buy pressure into the market. All of this tells me one thing. Long-term momentum is building. Despite short-term volatility, Bitcoin's macro setup is still incredibly bullish. From a technical perspective, funding rates remain negative, another bullish sign. The liquidity heat maps aren't showing heavy buildup above or below us, which means price is free to move swiftly if a trigger hits. I'm currently running a grid trading bot on Bionex that you can copy directly from the link in the description. It accumulates as Bitcoin dips and sells as it climbs, automating profits step by step. I plan to run this strategy until we hit $110,000 BTC and $2,500 ETH. Speaking of Ethereum, let's not ignore it. ETH is currently oversold, sitting at historical support levels. Its valuation relative to Bitcoin is near a cycle bottom, and the MVRV score shows it's heavily undervalued. For long-term investors, this is one of the best windows we've seen in months. Finally, let's talk market cycle timing. Out of the 30 major bull market peak indicators we track, 0 have triggered. That means we're not at the top yet. The big players are still accumulating, and the smart move now is to position early, not exit. So, here's my strategy in summary. I've set buy orders at $91,000. I'm targeting 107K, 118K on the next run. I'm not shorting, just waiting to long at optimal levels. My bots are running, the charts are aligned, and the macro signals are bullish.